Think you need a traditional credit score to qualify for a USDA loan? Think again. If you've been making consistent payments, but they don't show up on your credit report, USDA may still allow you to qualify using non-traditional credit. So what exactly counts as a non-traditional trade line, and how can you use it to get approved for a USDA loan? Let's break it down. What is non-traditional credit? When lenders review your mortgage application, they typically look at traditional credit, things like credit cards, auto loans, student loans, personal loans, things like that. But what if you don't have any of those types of accounts? That's where non-traditional credit comes in. USDA allows borrowers to qualify using alternative payment history as long as they're a documented 12-month history of on-time payments. That's the key. What counts as a non-traditional trade line for USDA? If your credit report is thin or non-existent, USDA lenders can look at the following alternative trade lines to verify your ability to make payments. So rent payments. One of the strongest forms of non-traditional credit is rent payments. Utility bills includes electricity, gas, water, and trash removal. Insurance payments, health, auto, renter's insurance. So just something that's not payroll deducted. So childcare payments, so must be made to a licensed business. School tuition, so out-of-pocket payments for yourself or your child. Store payment plans, so like furniture, appliances, or any kind of specialty store accounts. Medical bills, only if uninsured, and paid consistency. Internet and cell phone bills, so with the history of on-time payments. Auto leases, if not reported to the credit bureaus. And then personal loans from individuals, so not family. It must include written repayment terms and proof of payments. Savings history, so consistent monthly deposits for at least 12 months. So how would you use non-traditional credit for a USDA loan? To strengthen your mortgage application using non-traditional credit. Provide a 12-month payment history showing on-time payments. Gather documentation like rental verifications, utility statements, insurance or tuition records, bank statements, or canceled checks. Make sure you're working with a knowledgeable lender who has experience with USDA's non-traditional credit process. The USDA does have restrictions on non-traditional credit, though, so keep these limitations in mind. No debt ratio waivers, so you must stay within USDA's standard DTI limits. So no major credit issues, so non-traditional credit can't offset collections or judgments. So some lenders may still require a traditional trade line alongside your non-traditional credit. So if you're relying on non-traditional credit, financial stability becomes even more important. Consistent income, low debt, and a solid savings history can strengthen your case. So what do you do next? List your non-traditional trade lines, including rent, utilities, insurance, and other consistent payments. Start gathering documentation like rental history, utility bills, bank statements, anything that shows your payment track record. Next, talk to an expert. Not all lenders are familiar with non-traditional credit, so make sure you're working with someone who understands USDA's guidelines. Ready to see if you qualify? If you're interested in qualifying for a USDA loan using non-traditional credit, let's talk. Schedule a call and I'll walk you through your options, check your eligibility, and help you prepare the strongest application possible. Need more mortgage tips and home buying strategies? Reach out anytime and let's get you a home.